96.1 AM 1170. The Answer.
Welcome back. Welcome back. Again, this is Jason Hall, the co-host here for 5 years on the Whissel Weekend Show. I'm with Team Home Loans. I've been a lender for nearly 30 years. Also in studio, we have Jeremy with Whissel Realty, one of the top agents there on the Whissel team and a good friend of Kyle. He happened to have his friend Luke in. Luke's an MMA fighter and also works and trains out in Alliance East, right out there by the Santee Drive-In. Give you guys an idea on the location. They're also giving you a free 1-week membership to come check out Alliance East. So if you, your child, your daughter, anybody's interested, that's a great spot. And as I mentioned earlier, my niece is interested, and it's amazing that you guys did that. She lives on right on the border of Lakeside, El Cajon on Old Highway 80. So she's like literally 5-10 minute ride from mom or grandma to get her there. And so I'm definitely going to get her over there, check it out, see if she likes it, and then see if we can get her signed up. Cool. So thanks for coming in, Luke. I appreciate that and offering that to all of us.
Yeah.
So if you want to check out what it's like to be, a wrestler, fighter, UFC type of stuff, MMA, check out Alliance East. You can go right online. You can Google it, Alliance East. You'll get that information. And let them know that Luke and Jeremy sent you. All right. So let's get into some real estate. So we've had some email questions this week, Jeremy, on just some basic stuff that, I think some of the consumers just want to kind of know. And the first question I'm going to hit you with is, what does it mean when agents say it's a buyer's market or a seller's market, Jeremy?
Yeah, so that just means, and to put it into ultra simple terms, if it's a buyer's market, that means that there's less buyers than there are sellers. And seller's market's the opposite, right? So just how many buyers, how many sellers? If there's more buyers than there are sellers, then it's a seller's market, and vice versa.
Right. It's just supply and demand.
Yeah, exactly. Like what? Exactly. Supply and demand. Yeah.
So if we've got a ton of property for sale and there's not many buyers, that's a buyer's market.
Exactly.
And when we have a very low inventory of homes for sale, but there's a lot of buyer demand, that's a seller's market.
Exactly.
So what would you say we're in currently right now?
For sure, a seller's market.
Okay, so we're still in the seller's market, still low inventory, a lot of buyers, rates are low, so I know that always creates some demand as well. It's the spring season. Doing this nearly 30 years, the busiest purchase time we have all year is basically March through July.
Yep.
We could put in more deals in escrow as a city of San Diego. I know the Whissel team as well always puts in the majority of their deals during that 4 or 5 month span.
That's correct.
All right, next question. What happens when an appraisal comes over or under what I offered?
So basically that starts up, well, if it comes in over what you offered, and generally speaking, when you accept an offer, the price can really only go down from there. It doesn't really go up from there, right? So let's say the appraisal comes in high, round of applause for you. Oh, there's a button for that.
Yeah, 49, I think.
49, there we go. So.
Hit 49. So
There you go.
I'm going to use an example. Okay, so let's say we find a perfect home for $500,000.
Yep.
And we put that under contract, meaning we have a purchase agreement. It's signed by our buyers. The sellers agreed to that price and those terms. So now you have an actual ratified contract. We are now technically in escrow.
Yep.
Okay. And again, we offered $500,000. That's what our buyers offered. They accepted. Now, lo and behold, I order the appraisal. One of the nice things I do is we actually do your appraisal free. One of the only lenders that we don't charge ever for your appraisal. We on any of our purchase deals, especially working with the Whissel team. So we'll go ahead and do that for you free, but we'll order it up. And if it comes in, say, at 510, what happens? The good news is only the buyer and I, the lender, know that it came in higher.
That's true.
Okay? It's up to the buyer to share that information with you, Jeremy, as the buyer's agent, right? And no one ever shares with the seller that it came in above. We just let the seller and the listing agent know, hey, the appraisal's in, we're good.
Yep.
Right? And so I hope that answers that question to that listener out there. But what happens, this is what, especially in a buyer's or seller's market right now, a lot of times you're bidding higher than what the market was a month or two ago. Appraisals are done based on the past.
Yep.
So they're looking at homes that sold yesterday and 90 days ago.
Yep.
And so now we're starting to see, hey, we bid 500, but the last one that sold was 480. The appraiser makes some time adjustments, and the appraiser says, hey, here's an appraisal report, and I think the home's only worth 490.
Yep.
What happens in that example, Jeremy?
It's a new round of negotiations, basically. So now that's the bank is telling you we're only going to loan you
based on that 490.
Yeah.
Right.
I mean, there's down payment, all that stuff. We won't get into the weeds, but basically that's what they're saying. So now there's a few different things can happen. Either, and that's why it's a negotiation. One, we lower the price down to that 490 point.
So even though you're in a ratified contract,
Mm-hmm.
right, at 500,000, if the appraisal comes in less, you're saying you can still open up negotiations because you've put in like an appraisal contingency
Yep.
in your contract.
Exactly. So you
Okay.
can lower the price to that 490. The seller can ask you to kick in some cash to bring it up to that 500 because now the bank's not willing to do that. So the cash has to come from somewhere if you're going to hit that 500 mark.
Right.
Or, somewhere in between, halfway, whatever.
Right.
Yeah.
So what I've typically seen, and here's what I tell my typical buyers, 70% of the time if the appraisal comes in less, 70% of the time the seller reduces the price
Yeah.
to the appraisal.
I would agree with that.
20% of the time there's something in the middle where
Yeah.
the buyer and the seller agree to, hey, I'll bring in, let's lower it to 495 and I'll bring in $5,000
Yeah.
in our example, right?
Mm-hmm.
And the seller goes, okay, I'm okay with that. And then we, sign and agree to that. And then there's 5 to 10% of the time that the buyer and seller just never agree. The seller thinks it's worth 500. The buyer thinks it's worth 490 because that's what the appraisal report says.
Yep.
Although we were in escrow, although we've done an appraisal, we've done some home inspections, 5-10% of the time, it just falls out of escrow. You get your deposit back as the
Yep.
buyer. The seller relists the home back on the MLS, and that goes back on the market,
Yeah.
right? So that gives, I hope, that listener an idea of what happens there. And we've hit on this a little bit about contingencies, but what does it mean? What does a contingency mean, and what does it mean to remove contingencies?
Yeah, so a contingency is just basically the ability to back out of the contract. You have it built in. You're basically allowing yourself to back out of the contract and not get penalized for it.
Right.
You remove that contingency. You took away that safeguard that allows you to back out. Now you can't back out of the contract without getting penalized, and that's usually your deposit that you put in the beginning in escrow now goes to the seller.
Right. And the California Association of Realtors made an adjustment in that sales contract about 15 years ago. Probably you were still in high school. You might have been in grade school back then, Jeremy. But, I remember when that contract came out, and what's really nice, I let all my buyers know, the contract was updated and benefited for the buyer so that there's automatically contingencies in there.
Mm-hmm.
So the buyer, if they decide to cancel within 21 days, they can typically cancel, get their deposit back, and they move on. No harm, no foul.
Yep.
Right? Now, the seller can't cancel unless they put in an extra contingency. Nothing's built into the contract from the California Association of Realtors to help the seller because the seller is a homeowner. The state of California and CAR believed, hey, you've already bought at least one home because you own this home, so you know a little bit more than the buyer. However, I have a deal right now where the seller did put in a contingency, hey, JC and your client, we want to accept your offer, but it's contingent of us finding a home.
Yeah.
And actually talked to the agent just before coming on the show because he was writing an offer for his sellers on what we call an up leg on the next home.
Mm-hmm.
And they were like, hey, Jason, do you mind if we put all your information down so that agent representing that seller can call, confirm that your buyer is ready to buy my seller's home so that we can buy this seller's home represented by there. So there's multiple legs. You kind of gave me that grin, Jeremy, and that's what kind of happens.
Got that going on right now too.
And there's what we call multiple legs, multiple transactions. I know, Luke, you're probably like, what the heck they're talking about? I know Tom the same way. And I'm sure there's people out there going, wow, this is one of the reasons why you really need a professional real estate and lending team to help represent you, right? I mean, it sounds, I buy a house like buying a car. It's not that simple. There's a lot of legal information in there, as JC shared yesterday during one of our training, Jeremy, that people get in trouble if you don't understand the stuff. And if your agent doesn't understand, you really want to know all that information. Make sure you're represented by a true professional real estate agent, somebody like the Whissel team and Jeremy there at Whissel Realty, and a true lender that's been doing this, not 1 week, 1 month, 1 year. Like I would bet 80% of my competition has been doing this less than 2 years. I'm doing this for nearly 30 years. So there's a lot of things I've seen that help guide you through the process. And speaking of that, that's one of the next questions. How much do I need for a down payment, and what should my ideal credit score be? So to help answer that, there's loan programs out there right now with no money down. We do have down payment assistance. I've mentioned it a few times here on the air. One of our clients recently closed here in May of 2019. She bought a home with no money down. She put a $2,900 deposit. We got our down payment assistance program that covered her 3% down payment and her closing cost. She literally got her keys and her $2,900 back. Okay, now you had to make under like $140,000, $150,000 a year, which this gal did, but she bought a nice condo here in Mira Mesa, right down the street from the studios, and that's something that a lot of us could do. No money down. Her credit score is probably in the 700s. Ideally, that's where you want to be. So the question for the listener on what is the ideal credit score? The ideal credit score is getting the 700s, but there is things down to 640, even 580. But that's one of the reasons why you want to sit down with a lender, strategize on what is my credit, what can I do to improve it if I should. Even if you're thinking, hey, I'm not buying for 6 months to 2 years, it's never too early to start planning and strategizing on your credit, which that way you can have all the ideal options available for you. Mm-hmm. Maybe you want the lowest interest rate. You want the lowest mortgage insurance. Maybe you want a low down payment. That's all based on credit, because think about it. The better your credit, the lower the risk.
Yep.
The lower your credit score, the higher the risk. So if I have a high risk, do I want to give you a low interest rate? No. Do I want to give you a low down payment? No. Do I want to give you money for down payment assistance? No. Right? The answer is there's a lot of no's if you don't plan. And so it's never, ever too early to start planning on your credit. I'll do that for you free. Jason at teamhomeloans.com. You can email me there anytime. Again, that's kind of the show. We do have the Whissel Way coming up right next after this break. Again, you're listening to AM 1170, The Answer, and that was Whissel Weekend. Thank you for listening.